In this video, we will talk about one of the most powerful trend trading strategies with Heikin, Ashi and Fibonacci, and a live trading example from our VIP trading group. So by the end of this video, you will know exactly what to do in order to trade this strategy. We will go through it step by step and see what to do in order to place this trade. So our first analysis we do on the higher time frame. So we start out here on the daily chart. So let's see first which kind of trend phase we're in, coming here from a beautiful downtrend. What you can see here, accumulation, distribution, and so on. But then we had a trend reversal, the downtrend reversed into an upwards trend, and we have accumulation, distribution. And now we're at this point, and if you see and go not every single swing, but overall, it's accumulation, distribution. So we're here in a pullback, which is in general a really good time for us to place a trade, since we have the confirmation, because we had already the higher highs and higher lows, that this is an uptrend that has already developed very well, and we don't want to enter the market right at the top. We want to enter the market as low as possible. Therefore, a pullback is perfect for that. But before we take a closer look into that area where we want to place a trade, let's see if we have any relevant support and resistance levels that we should keep in mind for our trading. And as you see, we have right here at this point where the market is at the moment a support and resistance level that the market has acted to quite some time. Here as resistance, here it hit the level quite a few times. Here it acted as support, and as you see here, the market spent quite some time around this level as well here again. And right in this area where we want to trade, this is our relevant area. This is right in this area where the resistance is active. So this is a reason why the market is spending quite some time again right here. And we want to catch the market before it breaks out of that area. For that reason, let's scroll in a little bit and take a closer look at the relevant area. Within the pullback, which is also happening in waves, don't forget we're on the daily time frame, so a really high time frame. And after that, here is a kind of sideways range that has built. And within this sideways range, you see in this area, there were no new highs or lows built. The market has already broken through and made a new high and is now coming back. So let's apply the Fibonacci retracement and see how far the pullback has already come down. As you see, the market came down to the 62 line, so quite low before it turned and made a new upwards candle. And to confirm that this is a continuing upwards trend now, we can also use the Heikin Ashi candles. The Heikin Ashi candles can help you to recognize clearly the trending movements. So you see here we're in the upwards movement, all candles green, and in the pullback we see the red candles here with some green ones in between. But the really big moves are clearly in one color. Accumulation, distribution, accumulation. And here we have the reversal, so it is accumulation, distribution, and so on. And right here at this point where we have applied the Fibonacci retracement, we see that we have a doji candle. There is a really small body which is green, but if the next candle is green as well, it's also an additional confirmation for our trade long. So now let's jump a time frame lower to find the entry for the trade. So here we on the 1 hour chart, I've removed the Heikin Ashi candles to normal candles again. And here you see our trade analysis, the Fibonacci retracement, and the area where we want to look for a trade. So to make clear, if the market drops down even further, this area around the 62 is perfectly fine. If the market drops down further, we won't place our trade only if the market turns here at the 62 line and then continues into the upwards direction. And if I zoom out a little bit, for example, if some have entered the market right here and traded the breakout, this is totally fine, but really make sure that you place your stop loss at the right level. Not right here in between, below the sideways range. If you trade the sideways range, don't put your stop loss within it. That case, you have a high possibility to get knocked out, and then you're not in the trade when the market continues long. But now let's zoom in and concentrate on our trade. So we could trade a breakout strategy when the market breaks through here and makes a new higher high. I will make it blue to recognize it better. But I want to show you an indicator that we take for help. And this is the ADX, the average directional index. And I'm gonna place the relevant marks. So 40 and 20 are the relevant marks for the ADX. If the ADX crosses the 20 line from the bottom, this is an indication for a trend building. And if it's above 40, the trend is really strong already, and the possibility is rising that the trend may end soon. Here you see, right when the ADX crosses, the momentum up is there, but when the ADX is falling again, the trending movement is not neutralizing, so the ADX is falling, and here touching the 20 line again. If you want to know more about the ADX, go to my YouTube channel. One video before this, a whole video just on the ADX. In this video, we don't go deeper than that. So if the market continues up through this line we have drawn, our possible breakout line, we still need confirmation from the ADX. If the ADX is crossing the 20 line to the upside, then this is our confirmation for a trade entry. So let's see what the market does. The ADX came down below the 20 line again. You see there was no big trending movement in the market, but we have already broken through this breakout line. So we have made a new higher high, an indication that our pullback is ending now. But let's see what the ADX does. And here you see it is breaking through again. So you can either enter the market right away, or since there is a short candle building, we wait if the market makes a small pullback here. So there was the intent to go further down, but the market didn't really make its way further through. So here we could place our entry for a long position, place our stop loss far enough below. I zoomed out a little bit to give you a better overview. So it is better to place the stop loss below this sideways range that we had to make sure you don't get knocked out by a spike down, for example, before the market continues up. So let's for now place our stop loss there. And if you want to work with targets, you can of course place your first target here, for example, but of course the overall goal is way further up. So I jumped back on the daily time frame to show you what movement the market has made since we have entered the trade. The trade developed very well, so now it is of course time to move the stop loss. And this is also exactly the trade that we did with our VIP trading group with our members. I will show you real quick. So here I jump to our trading platform MetaTrader 4, and here you see the Great British Pound US dollar, and here is the chart to it. So we entered the market here right at this level at 1.22165, and then the market developed into our long trading direction. And of course, we didn't leave the stop loss below there to save up our positions. Of course, we moved the stop loss. Here you see now the new position below the last low. So in case the market drops and reverses, our profits are saved. And of course, you always need to leave enough room for the market, so in case it continues further up, that we're still in the trade. And here the excerpt from the VIP group when we entered the trade, and here when we moved the stop loss last and saved already 395 pips trading profit. That's it for this video, a simple but really effective trend trading strategy. If you enjoyed it, please give the video a thumb up and don't forget to subscribe to my channel if you haven't done so. That way you can keep yourself updated for new videos to come. And if you don't want to wait until then, you will find below this video the link to my website and more information about trading with me. See you there. Bye bye.